So here it is, the most popular video that I do on the YouTube channel, which is the stocks that I've been buying recently, and I'll go through these stocks that I've been buying into October, and just to keep that transparency up so you guys know what I've been buying in the last few weeks, especially right now in a bear market. I think it's very important to be showing that transparency of the opportunities that I am taking. And this is my US stocks. I will do a UK update with the stocks I've been buying on the UK side in a few days time, but we'll go through these stocks and I'll share a few reasons on why I'm buying them. And as always, if you want to know when I'm actually buying these stocks in real time, the place to be is on the Patreon rather than waiting for the monthly update. And on there, I do post 2 exclusive videos a week, one of them being the one that I was posting a few days ago, which was a video on the current exchange rate. So you might see this affecting you guys quite a bit on the UK side at the moment. I'm making them losses in this bear market not too bad. As well as that, there's a Discord with 600 members on, and I'm on there, and that's where it's easier to get hold of me on that Discord. We're getting stuck onto these stocks that I've been buying. So I think there's 5 stocks. I should have probably counted before I started recording, but I believe there's 5 stocks, and the first one is Hims and Hers. So I actually, when I made this video for the last month and what I've been buying recently, about 4 weeks ago, a few people actually put on the comment section saying, "Oh, you've not bought Hims recently, have you given up?" Just because I'm not buying a stock, it doesn't mean I've given up on it. I just can't buy every stock every month, and I felt like Hims was a time to take a break in the last month. But recently, in the last few weeks, Hims has been taking a bit more of a dip. If we do have a look here and we go on the last month, you'll see it's down 8%, especially since that kind of 9th of September, you'll see that it's down 16%. So with this stock finally having a bit of a dip, I thought, you know what, I'm going to capitalize on this opportunity and buy a bit more of Hims. So yeah, it's down at $5 at the moment, which is pretty much near my average. I'm actually about break even on this one. It's actually founded in 2017, which when you look at the progress of this business to be in 5 years time to be a 1 billion market cap, and it should be a lot higher than that in my opinion right now. I think Hims should be around about a 3 billion market cap company at the moment, and then you look what it's going to do in the next 5-10 years. I think we'll be talking about Hims and Hers potentially becoming a 10 billion market cap company. But the progress they've made on a financial point of view has been absolutely amazing. It's a founder-led company by Andrew Dunham. If you've never listened to him do any interviews, there's a few out there, fantastic interviews, so much passion for the business, and obviously delivered very well on the financial side of it. And he also has a massive stake. I think it's somewhere around a 9% stake in this business. So yeah, it's done absolutely amazing financially. Not that it's helped the share price. It's been absolutely killed off, as every single small cap growth stock has been killed off, massively unfairly sold off. I have generally never seen a business like Hims and Hers do what it's doing. Like, the financial performance of this business, I have never seen a business do this in my life, and to see it getting punished on the share price is just insane, because the share price just keeps going lower and lower, and fundamentally this business is unbelievably delivering. Now, they are focused in the telehealth space, which is a massive growth area. Obviously, it's had a bit of a boom forward because of the CV situation. However, Hims and Hers has still carried on with amazing amounts of growth, and the telehealth business should only get bigger and bigger. Especially someone like Hims, which is a bit of a smaller player at 1 billion market cap. They've been a little bit more condensed in what they've offered in health offerings. Recently, they've been expanding a bit more. One of the recent launches was mental health last year, and they've also been really starting to increase the amount of wholesale through like retailers, through like Walgreens, for example, and selling the products through there. That's one of the big drives they've actually made this year, and why they've performed so amazing financially. Now, in February time 2022, when we had the Q4 earnings, the company put in amazing numbers, by the way, 104% year-over-year growth, and they weren't losing too bad amounts of money either. And you'll see here, the adjusted EBITDA was to be in the range of 30 to 20 million loss, and it was to be in the consensus was 350 million, and they came out with guidance that was 15 to 30 million above the consensus guidance. And when this happened, I actually made a video on it. I was like, wow, that's insane guidance. And I thought they've set themselves up for numbers that are going to be really hard for them to beat in 2022. Well, we've just had their Q2 earnings, and they're already smashing it out of the park. And maybe I was a little bit wrong here. They do carry on smashing it. So they did an 87% year-over-year increase, which was amazing off, another fantastic year. But when you look at the revenue now, that is now guiding in the range of 470 to 485 million, we could, and knowing how Hims like to sandbag guidance, and this is only Q2, by the time we get around to like Q4, I would not be too surprised to see Hims pushing into that 500 million, knowing how they sandbag numbers. And that is going to be absolutely insane progress. Like, just flicking back there, previously the consensus was 350 million. That is, I've never seen a company deliver like that. And the thing is, on the adjusted EBITDA point of view as well, the losses are coming down as well, which is insane to see a company that's still having so much growth and also bringing its losses down. Now, the other crazy thing with Hims is actually, if we go through the transcript of the recent earnings, which was a fantastic conference call, by the way, if you've not listened to it. They actually came out that potentially they said that we could see profitability in Q4. And as well as that, going into 2023 will be a profitable year. So this is now the crazy thing where we have a company like Hims & Hers that's just come off growing off 87% with absolute smashes in revenue growth. Pretty much saying they're going to get to profitability, which was always going to be clear when they have amazing gross margins, what they do. We've been talking about that for a while on the channel. And then you're sitting on a valuation where it's gone from, the total enterprise revenues of, 13 down to a 1. A price to sales ratio at a 2 at the moment. And then you start adding in the fact that we're going to be talking about profitability potentially in the next 12 months. This is insane. This is absolutely insane, unbelievable opportunity. I've never seen a company do this before, and it's phenomenal. So yeah, I think a 1 billion market cap is a fantastic opportunity. I did buy some this time around. I think, like I said before, I think you without doubt this should be a 2 billion market cap. For me, I think we should be talking about a 3 billion market cap. And then you look at what the opportunity is in the next 5-10 years as they expand their offering. I'm really excited about this opportunity. So I did buy some more Hims & Hers, so don't panic for you guys that didn't see it on the last month's list. It's here this time around. Now it's had a bit of a drop. And the second on this list is my next favorite growth stock, which is DraftKings. You guys know this was going to make the list. I'm pretty much going to be buying some DraftKings at pretty much any point I can do. At $15, yeah, I'm going to be loving this opportunity. 6 billion market cap. And for you guys that don't know DraftKings, they are a daily fantasy sports company, but also have sports betting. And the recent acquisition of GNOG also means they move into the online kind of casino space as well. So they've got 3 different kind of businesses here. Really excited to see what happens with the GNOG acquisition, but main thing that I'm looking at here is the sports betting side of the business. The reason why is sports betting growth is going to be absolutely insane in the next 10 years. It is currently, in my opinion, one of the TAMs that's been slept on hugely. And why is this growth going to be absolutely insane in the next few years? Well, basically, sports betting hasn't been allowed in the US, believe it or not. Obviously, someone from the UK can tell you that sounds absolutely bonkers to see there's no sports betting, and especially somewhere in the US, you can see this being a massive growth area. Now, at the moment, there is a lot of states that are starting to come online. However, there's still a lot of states still to come online, which basically means we've got the states here that have been legal, and they're still growing at like good 20, 30, 40% revenue growth rates. So they're already, even though they're a bit more mature, they're still driving good amounts of growth. And then when you factor in the likes of Texas to still come online, the likes of Florida potentially to come online, the likes of Cali, which potentially we could see in November time come online, they're going to continue to drive growth. And whatever numbers have come out on the forecast side of it, all that's been happening is they've been hyped up because this area is growing faster than what anyone thought it was going to grow. Now, the great thing as well is that a lot of these states are driving profitability very, very quickly. So they currently have 5 states which are contributing to profit. And by the end of this year, they're actually aiming to have 10 states that contribute to profit. So even though these states have only just come online recently, 5 of these states that they're in are already driving profitability. And within the next year, we're hoping for 10 states driving profitability. And that's because when they launch in these states, they go very expensive on like the marketing spend, which they get a lot of criticism for, like, oh, DraftKings loses a ton of money. But people don't realize it's because they do a lot on spending, acquire the customers, and then drive that to profitability within 2 to 3 years. And worst case scenario, people always talk about the cash burn, is that DraftKings never really has the threat of going bankrupt, because with a lot of their spending they do in marketing, if they ever got an issue where, say they're low on cash or anything, all DraftKings need to do is turn the tap off on marketing spend, and all these states would just go profitable overnight, and some of them would be insane amounts of profitability as well. But obviously they might as well take market share now, make sure other competitors like FanDuel aren't taking them customers, and then DraftKings keeps them for life and they carry on driving revenue into the business. So yeah, you've got a business here that has massive amounts of growth. Even the more mature states are still growing. You also have really good amounts of profit growth here going forward when they do want to turn to profitability. And the business is growing like a weed. Like this quarter, we're expecting nearly 100% revenue growth. Next quarter, 71%. This year was 64%. And this was a year where they were supposed to be growing around 30%. So you can see here, that got doubled up. You can see here next year they're expecting 33% revenue growth, which, by the way, if Cali comes online, you can expect that to be totally smashed out of the water. I think we'll see DraftKings more than likely put in a 40 to 50% revenue growth year, so analysts will be playing catch up once again here. That's how fast it's going. And yeah, I think that this is one of the biggest TAMs that's going to be in the US in the next 10 years. And I think DraftKings will be the market leader in that space. And yeah, I think that when you think about the revenue growth and the profit growth that will come from these states, fantastic opportunity, and I won't spend any more time on it because I've got plenty of videos on this one on the channel. Next one's Google. So this is a stock that I'm trying to build probably into my biggest position. It's currently at a 1.2 trillion market cap. It trades at 18 times earnings, and Google is currently having the biggest dip that I believe I have ever seen Google have since I've been investing in the stock market. So it's down 35% at the moment. Even in that CV dip, it was down 29% on the peak day. And then since then, it's got an absolutely lovely chart as Google. Look at this. Yeah, since then, I've never seen really Google have a dip like that before. Even in the 08, it was down 56%. So that was the last time it had a major dip like this. And yeah, a company like Google at 18 times earnings, I think is just an unbelievable opportunity. And when you look at Google, the amount of products they have is insane. Whether it be Android, Chrome, and the search engines they have, the email servicing, the storage side of it, the Google Meet, Google Play, obviously YouTube, that's a massive growth driver in the next few years. There's plenty of things that we could spend a good 5-10 minutes running through, but I'm sure most of you guys will know most of these products on this list. So they have one of the biggest moats out there. And at the moment, they're actually doing okay. Like for a company that is getting affected by a few, regulation issues potentially, you're getting a company that's been affected because of marketing budgets, spending advertising on YouTube, for example. And in this period of time, it's still actually growing like 12% year over year. And operating income is still doing pretty okay at the moment, considering it's a bit of an investment year at the moment for Google. You've still got a company that's doing fantastic in a bit of a tough time in the market and still got a good amounts of profit in this time period. And when you look at the valuation point of view, like total enterprise revenue is the lowest it's ever been. Same on a price to sales ratio. On an enterprise value to EBITDA, it's a 9, lowest it's ever been, not been a single digit before. PE on a forward basis is 17, it's never been in the teens before. And all the metrics are screaming out lowest valuation it's ever been at. And you look at this, I mean, just this platform's Simple Wall Street, by the way. I get a lot of questions about this. If you want to join, there's a link in the description, and you'll actually get on I think you get a 14-day free trial, and on the 5th day, I believe you get a 30% discount code. So do keep your eyes open for that. But yeah, I mean, just look at the progress that this business has been making: revenue growth, profit growth. Even now, it's having a bit of a slowdown, but still fantastic. And there's a little bit of a dip in the profit at the moment, but that will come back, and we'll see this company putting good amounts of profit. I mean, health-wise, it's probably the strongest balance sheet in the stock market. 125 billion in cash, which is just insane. So yeah, they've got a lot of things they could be doing there. Yeah, for me, Google's a no-brainer. I want to make this a top 3 position, arguably my biggest position. So I'll continue to buy more Google when I can. And the next one is Block. So it's a 32 billion market cap company. Same again, this is absolutely getting slaughtered. It was around about $275, now down at $54. And even before the CV situation, which it benefited from massively, it's actually now lower than that period of time. The last time you'd have to go to Block being a $54 stock was in 2018. So you think about the progress this business has made in that last 4 years. Totally wiped out, which is just crazy. So yeah, I think that Block is one of the fintechs out there that's going to have an amazing next 5 years. Everyone in the US is massive on the Cash App, and you look here, it's the number one finance app in the US at the moment, and it's continued to be, in my opinion, the top finance app here. Now, obviously, I do own Venmo, which obviously was PayPal, and obviously the PayPal app. But I mean, even below that, before you get to Chase Mobile, and that's 6, Bank of America. it just dominates. It just dominates, and I think that it's going to continue to be the number one finance app out there. Now, Square or Block has been one of those stocks that's been a victim of its own success. It had such a boom in the CV period. It's had a lot of demand pulled forward, but in the next 5-10 years, I still think it's going to be a fantastic fintech business. Now, the recent earnings were a little bit flat on the revenue growth, as you can see here, but when you actually dig into the financials, you'll see there's still a lot of impressive things going on with this business. So when we take a look at what they actually do, they have two parts of the business which we just talked about. One of them being the Cash App, which a lot of people, peer-to-peer, sending money, using it as, buying Bitcoin, or using it as card to buy things, or sending money to friends, buying stocks. Or there's the business solutions, where there's a lot of different products, for example, like managing payroll, invoices, access to capital, and a lot of business solutions here, which has been very impressive over the last few months. So when we look at the breakdown of the financials, you'll be able to see here that the transaction-based revenue, which is like the Cash App, which we talked about, is still growing okay amounts. Now, the key part, which is the subscription and service-based revenue, which is the more business part of the business at the moment, or the company, is growing absolutely insane rates. You can see here that it went from 685 million over 1 billion, which is the key part that I really want them to grow, and it's happening. Hardware revenue, which I'm not too fussed about, is still growing okay amounts, but I'm not big on that part of the business. And there's some Bitcoin revenue, which has propped up the revenue at the moment, and you can see that because Bitcoin has been going down, at the moment, the revenue is decreasing. Not too bothered about the Bitcoin revenue, but that's obviously why the growth at the moment looks slower than what it is. Now, the key reason why I want the transaction-based revenue to do so well is because when you look at the cost of revenue, the transaction-based part of it, they make decent money from, but the subscription and service part of the business, which is the fastest growing part, which we just talked about here, and is about to become the biggest part of the business, you'll see here the gross margins here, 213 million, and they make 1 billion in revenue. So this part of the business is the fastest growing part, and also the most profitable part of the business, which is why I'm big on this in the next 5-10 years. And as long as that still keeps performing, I'm really happy to be a Square or Block shareholder, and that's doing absolutely amazing. Obviously, you can see they're really heavily investing back into the business through product development, sales and marketing. Obviously, they made the acquisition of Afterpay recently, G&A. So these are a few bit of expenses at the moment, which obviously has put a bit of a loss in at the moment, but I'm very sure they're going to start cutting them back, and we'll have good amounts of profitability with Block or Square as well in the next few years. So yeah, at the moment, the key things that I want to see happening in Block or Square are doing that exactly at the moment. So I'm really happy to be a shareholder, because I think they've got a really big 5-10 years ahead of them. And this company is very similar to Square or Block, which is Shopify. So Shopify, once again, has been a victim of its own success. It's done very well through the CV situation, had a lot of demand pulled forward. It's having a bit of a cooling off phase at the moment, but I think it's been very unfairly punished on the share price. And at 34 billion market cap, I think this is the future of e-commerce in the next 5-10 years. If you are going to have an e-commerce site, you're going to have to go to Shopify for that. And same again, this is the share price is now back at the levels it was in 2019. All that kind of benefit it's had from the CV situation has been totally wiped out, which is just bonkers. And yeah, I think this is a great e-commerce company for the next few years. Now, they offer the complete solution if you want to become an e-commerce business. They manage the payments for you. They give you access to capital. They manage your marketing and analytics. You can have the app versions created by Shopify. They manage your inventory, the fulfillment, the shipping, which is the new part of the business, which has been really the big part they've been really investing into at the moment, and order management as well. All these things come from using the Shopify platform, and I think that's why it's got such a great future, because it gives you everything you would want as an e-commerce business. And it had so much demand because of the CV situation. Everyone rushed to get an e-commerce site, and it's just had a lot of demand pulled forward. But in the next few years, it should go back to decent amounts of growth, good amounts of profit, and we'll see Shopify do very well. Still, after all the boom that it's had, it's still growing 17%, which is pretty impressive. And when you look at the financials of the business, you'll be able to see that their subscription solutions have been doing okay. The merchant solutions have been still growing at really good amounts, and you'll see here that the cost of revenues are still fantastic, and they've still got great gross margins at the moment. And you'll see that they are investing really heavy. You'll see there's a bit of a boom on the sales and marketing at the moment. You'll see here that the research and development has gone up a fair bit as they kind of expand their shipping and fulfillment centers at the moment, and the G&A is a little bit higher. So they are at the moment having it a little bit more of expenses, but even so, they're still not losing a ton of money at the moment, and I think these investments will be worthwhile and will get the rewards in the next few years. Now, it does look a little bit worse on the losses because the other expenses, which is to do with Affirm, benefit them massively last year, and now not as much as the firm has not been doing so well. So the losses do look a little bit worse than what they were, but that's only because of the firm. When you look at the core business, they're actually doing quite well from the revenue point of view, gross margins point of view, and apart from the big investments they've been making, they've done okay on that side of it. So yeah, I think this is the stock you want to own if you believe e-commerce is going to continue to be big in the next 5-10 years. I think most places or companies will have to go to Shopify, and to get it back at these sort of levels, I think it's a great opportunity. So I did buy a little bit more Shopify. So those are the 5 stocks that I've been buying recently. I'll do, like I said at the start of the video, a UK version in a few days time, but I hope you enjoyed the video. Let me know in the comment section what you've been buying recently as well, and as always, smash that like button. And if you're new and you found this video helpful, subscribe. There's probably a few more videos on these stocks in a bit more detail for a little bit longer. It's just that I don't want to, it's already quite a long video, and if I was to talk about them all individually for like a long period of time, it might get a bit boring and would be a very long video. So a bit of a brief look into them and a bit of an update, thoughts on them. But yeah, anyway, hope you enjoyed the video, and I'll catch you on the next one.